Welcome to Keiretsu Forum Presents. My name is Randy Williams, proud founder and member of Keiretsu Forum. We've grown around the world. We have 46 locations and we invest in many asset classes. We're known as an angel organization. We're fortunate to be the largest angel network in the world, but we also like real estate. This is segment 2 with Matt Burk, CEO of Fairway America. He's coming from Portland, Oregon, and talk about the storm clouds, the risks, the opportunities of real estate. We're taping this in Silicon Valley in 2016. So let's fast forward 2017, 2018. Let's talk about storm clouds, but let's talk about, this will be very general for a moment, but asset classes you like and also markets you like in the future, because I think in segment 1 we talked about who you're underwriting. Now let's talk about what areas you like to invest in.
Yeah, I think one of the things that I like the most is picking the right sponsor, the right person who's got the right mindset. So I would say to some degree we're somewhat agnostic about what market
sponsor.
we're in. Sponsor would be the real estate entrepreneur, the person who is out on the streets in that community that's originating whatever asset type it is that their business does. And some of these may be loan originators, originating private debt. Some may be value add, direct acquisition of property, real estate syndicators. Some may be purchasing distressed debt. So first and foremost, we look at the people. That said, we like to stay in reasonable size markets. So, I have one of our best sponsors in Boise, Idaho. We have them in Salt Lake City. We have several clients in Texas, so Dallas, 2 or 3 people. We have people in the Southeast. I've got people in the Northeast as well. So we really have them all over the country. And ironically, I'd say California is probably the market that I find the most difficult to get good risk-adjusted returns. So we tend to shy away from here, even though I am from here. So
obviously, you being a real estate operator and general partner yourself and have your own funds, our relationship is such that you are also running our funds, and we fortunately have a lot of capital to give you and will continue to give you, because I'm a happy investor in, and obviously I've been with you the last 5 years as an investor. But when you say your favorite sponsor, you named the town right there. You've looked at hundreds of sponsors and entrepreneurs. Why this particular gentleman that you just mentioned?
And I would say, I have a lot of favorites. I think, hopefully I said one of my favorites.
Yeah,
so
you did.
I don't
I got you.
Get anybody else upset with me. But just very, very disciplined underwriter of real estate. One of the biggest challenges in this business, right, for people is that when times are good and the cash is available, they go out and chase deals, and that's how people get paid, right, is to make fees on deals. And so what happens to a lot of people is they end up doing deals they shouldn't do, advance rates and purchase prices that are too high because they're competing against a bunch of other people that have access to capital, and all of a sudden the underwriting disciplines go away, and that's when people start making bad deals. So it's a bad combination when you pay too much for a property or you over advance on a loan based on an inflated value, and you do it at a lower price because there's too much money chasing deals. So I like people that are very disciplined in terms of the way they go about doing their business, and that's really what we look for, even more so than geography.
Okay, this is totally unscripted here, but let's brainstorm. The top 3 or 4 barometers and or key indicators are important to you when you underwrite a sponsor, a CEO. Tell me what you like best in an opportunity.
About the person or the way they underwrite? Well, about
everything.
About the person, I want to see that they have a track record. They've been doing it for some period of time. They have an asset strategy, so they know what they know and they stick to what they know. And even that might even be a fairly broad asset strategy, but they know their market, they know what it is that they're doing. Disciplined underwriters. And what I would call value investors. Warren Buffett talks about it, right? Is like the stock price, the stock may trade at a number that has nothing to do with its inherent value.
Right.
Same thing with real estate, right? If people are buying property at below replacement cost, so below replacement cost acquisition price, or conservative loan to value in the case of debt. If the property's worth $1 million and I lend somebody $400,000 secured in a first position, I'm pretty safe. Those are hard to come by though, right? And they're very competitive. And cash flow, right? Things that are going to produce cash so that if you find yourself in a downturn or a recession and there's a holding period, then you're actually getting cash in. So, land and speculative developments, of course, something goes wrong sideways and there's no tenants in the mix and you've got debt on the property and you've got debt service and overhead and no money, those are the projects that end up getting hurt badly. And I know, I know that you have your opinion. So what are some of the things that you like to see?
Well, at Keiretsu Forum, we invest in tech and also real estate. We invest in lighting and women's shoes and products and deep technology. But just in Northern California, we've done over $300 million in equity in real estate projects. But I think this is pretty generic response to your question because this is how we underwrite a tech investor. A tech CEO. Number one, I want skin in the game. I want to know she or he, has some serious money of their own risking capital with us. Number two, I want to make sure that jockey, i.e. the CEO and team, have great season records that we can truly look at. First, we had a company that we invested $15 million 4 or 5 years ago, and I said, well, your past investors are coming into the deal? They said, all of them. That's a validator. I said, how much are you putting in? He put in 10% of his own money. That's really important. Past investors, what do they think of you? Number three, go slow. As an investor, I like to see milestones hit. And so when I see a tech and or real estate, just like myself, I've invested 3 times with you over the last 5 years. I started slowly and it's growing because I trust you. Trust is so important. Obviously all the things that you underwrite, because you underwrite sponsors or entrepreneurs throughout America, but I have to trust you because I like the fact that you think about risk first. Everybody thinks about it.
Yeah, I'd say I'm inherently, as a real estate lender, we were always looking at what's the worst case scenario, the downside. If you have to take this property back, how much does it cost to foreclose? How long does it take for them? They file bankruptcy, they rip all the everything out of the property, and you get back a shell of a building, and you've got to pay the insurance and the taxes and the utilities and all of this stuff. All that adds up. How do we get out of that deal whole?
Right. Yeah. So I gave you 3. 4 and 5 would be number 4. Would be dashboard technology. I want great communication. There's storm clouds all the time, but I want CEOs, whether it be tech and or real estate operators, to tell us if there's an issue, because I think we can help.
That's right.
We have 3,000 members around the world. If there's an issue, let us know. Maybe we can help. And lastly, I want to know about historic returns. If you're going to tell us something that we can vet, and we do screen and vet, something that happened 10 years ago, because we've all had issues or problems, in regards to investing, but the CEO has to be totally honest and transparent about, well, I've had 94 deals and 93 of them made money. Well, let's talk about the one that didn't. I always think it's disingenuous, both for angels, VCs, and or real estate investors, always talk about the wins. Let's talk about the lessons learned about losing money, and I want my sponsors and or whoever I interact with to talk about those losses.
Yeah, and it's human nature for people to try to brag and make themselves seem like they're bigger than they are, or to talk about all their wins and all of that. It's much more difficult for people to do that, but I agree wholeheartedly. It's like you want to try to find out, what were the losses, what happened, and as long as it's reasonable and explainable, then you actually want to have people that have had some challenges and experiences like that, because it makes them stronger people.
So your filter system, obviously you want to have a strong, healthy relationship with someone you're giving money to, as I do. I want it to work out. I want them to do well, but we have to do well too. Tell us some of your filters, your other filters that, says, wait a minute, the flag's gone up. He didn't tell me something, or she didn't. Tell us some of the other filters you have before you make a real estate investment. And then let's talk about my issue or concern about some of the secondary, tertiary markets that you're investing in, that I'm a happy investor in. But if there's a downturn, is it going to be tough to liquidate some of this real estate in Podunk, wherever?
Yeah, and I think that sometimes those markets will be more difficult to liquidate, but if they have cash flow and you have to sit on them, if your downside is that you just hold longer and you're not in a position where you have to liquidate those assets, and some of that has to do with the capital structure, right? If the debt is there, or you have debt that matures and things like that, that can cause problems. The filters for me with sponsors and people that I deal with, I think some of it is doing it as long as I've been doing it, and dealing with hard money borrowers. They always have a story, right? There's a problem here or there or the other place. Your BS meter gets to be pretty good after a while. So, the first filter is just conversation and dialogue. And then, of course, if they kind of pass that sniff test, then it's major due diligence. We have a 7-page due diligence program people have to go into if we're going to invest in their fund, especially, because if they have the authority to make decisions without us getting to pick and choose the asset level information, then I want to know that they know exactly what they're doing. So we dive deep at the asset level. You know, how do they value their properties? Is it legitimate valuation? You know, what are the underwriting metrics that they're using to make the determination? We get background checks on people. We'll get financial statements on prior deals. We'll verify existing investments that they've done that have gone full cycle. We ask them for spreadsheets of their full track record. You know, we try to find, as you say, the losses and figure out what the deal was. I ask people up front, tell them, hey, look, if we're going to do anything, we're going to go do a deep dive background check. Is there anything there you want to tell me?
Good.
You know, before they even, it's amazing though what people will do. They'll still sometimes give you the background check and you find things that you can't believe that are on there that.
Yeah, I'm a happy investor in a company back east, and he wants to raise additional money. I brought it to you, and it's nice that your litmus test, you say, hey, we're going to spend several weeks doing due diligence, even though that I personally invested, not through my fund or anything, just personally invested, and so I will probably put more capital in after you do due diligence. So all of us need filter systems. All of us need people to help us do due diligence.
For sure.
And you know, and so who's listening to this and watching, and you know, create your community of trust, and it's very important. And that's in the spirit of Keiretsu Forum. We do not take warrants or commissions when you decide to invest. 100% of your dollars goes to that opportunity. So if Matt Burk pitches a opportunity or presents an opportunity, you go direct. We don't receive anything, but we have mind share of a community to help us be better investors. So maybe 15, 20 people that really get the opportunity that you bring forward, or whomever brings forward at Keiretsu Forum, and then we make a decision, or members make a decision independently to invest. 100% of the dollars goes to them, but to the company. So let's get back to areas that you're intrigued with. What type of returns are you intrigued with to actually pull the trigger and actually underwrite and actually invest in a company? Do you need probably between a 9 to 14% after your fees?
Yeah, well, I mean, we target a gross return to the fund on any investment that we make of 12% at least. We will certainly do things that produce in the 10 and 11% range, but that starts to get on the low end of what we're looking for. And it depends on the type of investment. If we're lending on a first trust deed, then we may end up at 10, 11% if it's a very conservative loan to value, because in my mind that risk adjusted return is very attractive. If we're investing in an equity deal, we may need a higher multiple on something like that, but I still want to see cash on cash return. So we just look at every deal independently of the others, and we just try to assess what is the risk adjusted return on this deal. And, to your comment about secondary markets, I actually like secondary markets in a lot of ways because you can get better cash flow. In the small balance real estate space, highly fragmented, right? The institutions don't chase it because it's too small, and it's just much less systematic in the way people do it, and as a result, you have more opportunities.
So tell me what's your favorite 2017, 2018 asset class that you want to invest in?
I mean, as I said, I'm a little bit agnostic as to asset class. I mean, I like just fundamental deals. I mean, we may look at, I'd say multifamily's overheated in certain markets, but fundamentally I like multifamily. Single family even, residential fix and flip, that market has been very heated the last few years, but I think the residential market has quite a bit of runway. Housing starts are still very low. Multifamily starts are very high. So I think housing market has a ways to go. I like self-storage. I don't like retail and office as much, but that said, I have plenty of sponsors that are experts in those two asset classes that we would absolutely invest in.
See, I think the key here is diversification. Don't just roll the dice in multifamily or R&D or this and that. So we're coming to the end of the segment, and Keiretsu Forum Presents has taped 10 segments on a myriad aspects of angel investing and real estate. So hopefully you've enjoyed the content today. Matt, thank you so much for coming. You've been a wonderful partner, and shall we make a lot of money for our obviously limited partners and ourselves in the future?
That sounds like a plan, and thank you for having me.
Thank you so much.